Hello everyone. Welcome back to Stock Market Meridian. Today is 13th July 2026 and you're watching today's post-market report. Let's begin our video with today's market action. What a remarkable recovery we witnessed in today's trading session. The markets opened with a huge gap down, creating panic among investors. In fact, Nifty slipped below the important 24,000 mark right after the opening bell. However, buyers stepped in aggressively throughout the session, leading to a strong bullish comeback. By the end of the day, the entire market had completely reversed its earlier losses, with the Nifty closing strongly around 24,211 in the green. One important risk, however, still remains. Brent crude oil continues to trade above $75 per barrel, and as long as crude oil remains elevated, it could continue to create pressure on equity markets. Looking at the sectoral performance, the FMCG and media sectors ended as the top losers, while the IT and media sectors emerged as the biggest gainers. The IT sector alone rallied nearly 3.6% in a single trading session, becoming one of the biggest contributors to today's sharp market recovery. Now let's move to the geopolitical updates. The conflict between Iran and US continues to escalate, with neither side showing any willingness to back down. Iran has once again threatened shipping movement through the Strait of Hormuz while continuing attacks on US military bases across Gulf countries. At the same time, the United States has intensified its missile strikes on Iranian positions. These developments continue to keep global markets on edge, especially because any disruption in oil supply could push crude oil prices even higher. Now let's move to the company's specific updates. The biggest highlight of today's trading session was undoubtedly the IT sector, where almost all major IT stocks witnessed strong buying interest. Amongst them, TCS stole the spotlight, with the stock price rallied nearly 6% during today's session. This rally came after two major announcements aimed at strengthening TCS' position in rapidly evolving AI-driven technology landscape. First, TCS has secured a massive multi-year contract from global engineering giant ABB. Under this partnership, TCS will move beyond traditional software support and will manage ABB's complete global network operations through an AI-driven network as a service model. The company will build and operate ABB's secure, modern, and intelligent global digital infrastructure, helping improve operational efficiency, cybersecurity, and future-ready digital capabilities. And the second major announcement came from TCS management itself. CEO K. Kirthivasan and COO Aarthi Subramanian announced a significant restructuring of company's top management. 5 dedicated business units have now been created to focus exclusively on high-growth segments including ServiceNow, travel and transportation, energy and utility, the US West Coast markets, and global anonymous businesses. Since banking contributes nearly one-third of TCS overall revenue, the company has also decided to split its America's banking business into separate US East and US West division to improve customer focus and accelerate growth. With artificial intelligence posing a major disruption risk to the global IT services industry, TCS is clearly positioning itself ahead of competition by forcing aggressively on AI infrastructure and specialized business units. Before moving further, a quick reminder. Every morning before market opens, I upload a detailed pre-market video, and also every evening after market close, I bring you a complete post-market report covering global markets, company updates, economic developments, and everything that can impact the stock market. So if you don't want to miss any important market updates, make sure to subscribe to Stock Market Meridian and also press the bell icon. Now let's continue with remaining updates. Swiggy remained under pressure today after serious food safety concerns surfaced. According to market reports, the Food Safety and Standard Authority of India has issued 9 regulatory notices to Swiggy Instamart following multiple customers' complaints. Consumers alleged that expired, spoiled, rotten, and unsafe food products were delivered through the platform. Products including Healthify 100% whey protein, Noise, Homestyle Madras mixture, and even Akshaya Kalpa organic eggs were reportedly delivered well beyond their expiry dates. And one of the most serious allegations involved an infant food formula that was found contaminated and improperly stored. Shockingly, after the customer returned the product, The same unsafe item was elegantly delivered once again. FSSAI has now demanded a detailed complaint report covering quality control, inventory management, and hygiene standards. Failure to provide satisfactory explanation could result in strict legal action. Following this development, Swiggy share price declined nearly 2.3% on today's trading session. Next important update is in a landmark decision for India's defense manufacturing sector. The Defense Ministry is preparing to allow private companies to manufacture advanced strategic missile systems for the first time. The ministry is expected to issue an RFP for manufacturing the Astra Mark II air-to-air missiles, which has an operational strike range of nearly 180 to 200 kilometers. Companies expected to participate include Adani Defense, Bharat Forge, Tata Group, and Mahindra Group. Until now, Bharat Dynamic Limited was the only manufacturer for the Astra missile series. While this expansion is positive for Indian defense ecosystem, but it could create competitive pressure for Bharat Dynamics, making this development slightly negative for the company. And now this move has become necessary because Bharat Dynamics production capacity is fully utilized due to rapidly increasing domestic demand and growing export orders. Next update is global brokerage Macquarie has upgraded Tata Motors passenger vehicle business from neutral to outperform. The brokerage also increased its target price from 367 rupees per share to 381 rupees per share. Analysts believe Tata Motor will benefit from an alternative SUV launch pipeline, stronger domestic market share, and also gradually improvement in Jaguar and Land Rover margins. Macquarie also believes that current valuation offers attractive downside protection for long-term investors. Next update is a small cap company, Cloud Softech, with a market capitalization of nearly 1600 crores, has announced a significant 5 years agreement with SpaceX International Limited. Under the agreement, company's US subsidiary will provide AI infrastructure, cloud-native AI platforms, and enterprise digital transformation solutions. The agreement establishes a long-term commercial framework, while actual revenues will begin flowing as individual statements of works are finalized. Following the announcement, Cloud Softech shares immediately hit the 5% upper circuit on BSE. And this company has also guided for 3,000 crores revenue by financial year 2027 end, after crossing 1,000 crore revenue during financial year 2026. Next update is JBM Electric Vehicles, a subsidiary company of JBM Auto, has signed MOU with Driven to supply 500 electric luxury buses over the next year. The buses will initially be deployed for premium intercity travel, while both companies also plan to expand into school transportation, employee mobility, and airport transit. Generally, Drive-in will provide leasing, maintenance, and charging infrastructure, allowing fleet operations to adopt electric buses without heavy upfront investment. JBM has already deployed more than 3,500 electric buses globally, and management expects this number to cross 5,000 within the next year, with India's e-bus registration growing nearly 40% during the first half of calendar year 2026. This partnership comes at an ideal time. Next update is Kalpataru reported a healthy operational quarter. Quarterly pre-sales increased 6% year-on-year to 1,329 crore rupees, while cash collection surged 17% year-on-year to 1,365 crore rupees. The company also launched its new luxury residential project, Kalpataru Van, located in Andheri West, Mumbai, targeting the premium housing segment. Next update is SEPC has received a termination notice for its 521 crore rupees highway EPC subcontract from Shalimar Corp Limited. The cancellation project involved four-laning of the Shahjahanpur to Visalpur road in Uttar Pradesh. The company has referred the matter to arbitration and stated that it will continue updating the exchanges as the legal process moving forward. Finally, let's look at today's quarterly earnings. Bajaj Consumer Care reported an excellent set of Q1 numbers. Revenue increased nearly 25% year-on-year to 341 crore rupees. Net profit jumped almost 85%. EBITDA more than doubled, rising over 103% year-on-year, while EBITDA margin expanding sharply 24.4%. Overall, it was a very strong earning performance across all key financial parameters. So these were all the important market updates for today. If you found today's report useful, don't forget to like, share and subscribe to Stock Market Meridian. I will meet you again tomorrow's morning with another detailed pre-market report. Until then, thanks for watching. Signing off. Bye bye. Jai Hind.